Hi, Joanna. It's so good to finally catch up with you. And thank you so much for taking the time late at night. And I really appreciate your clarity, the way you think about things. And I'm sure that our listeners will definitely benefit from our conversation.
Well, thank you. I'm super happy to be here on the beach with you, and I'm excited to have a great conversation and share what I can with the audience.
Thank you. So I think let's just start from the beginning. You have an interesting background. You've been an operator, in restaurant brand, and then you've also worked in e-mobility, and then you made a transition to venture. I'd love to know, more about your motivations and what led you to the world of venture.
Yes, it's such a great question, and my path is certainly non-traditional. So, as you mentioned, after university, I worked for a company called Restaurant Brands International, which is a big food and beverage conglomerate globally. And I had the opportunity to work mostly in Latin America for 2 years, really helping franchisees understand exactly what they were selling in the restaurants. This was at a time when data and analytics were really new. It was 2013. Tools like Tableau were just starting to gain traction. Excel was still the standard for analyzing stored data. And it was really the first time that I was helping my clients understand what was going on from an operational perspective. And to me, those were incredibly magical moments, just getting to see the power of data in real time and seeing how much that could drive business results. And while I loved the role, the longer that I worked there, I realized that I wanted to be closer to the data and the technical problem. And so I decided to come back to the US. And at that time, mobility was having a huge moment. This was when Lyft and Uber were just really gaining momentum and taking off, and it felt like everybody was talking about these new services. And so I ultimately decided to join a company called Via. And what Via does is they focus on powering public mobility solutions. So their clients are companies like governments and big corporations, which think about moving big groups of people from point A to point B. And as someone who's always really cared about the impact of technology on the public sector, to me, it felt like the perfect place to be. And so I spent 3 years there working on everything from operations to marketing to strategy, learned a ton. I joined when we were 30 people. By the time I left, we were about 800. And so it was a really incredible growth trajectory. And when I left VIA, I was really thinking about what my next move should be. And I decided to take a step back and go to business school, and spent 2 years at MIT thinking about potential founder paths, potential alternative paths, and ultimately had the chance to intern at a couple different venture funds. And that really opened my eyes to the world of investing, particularly early stage investing, where I felt I could be most helpful.
Yeah.
And I had the chance to work with founders on their early stage concepts, go deep on a couple different industries, and really just fell in love with the VC process, which is all about finding great companies, underwriting deals, and then ultimately helping founders succeed. And so I feel incredibly grateful that now I'm working at Emerson Collective, and it's been a really amazing ride.
That's pretty cool. And what I think one thing that you've mentioned, and I think which is constant as well throughout your journey, is your focus on technology. So, did you have parents who had interest in technology, or friends, or how did it spring?
Such a good question. My parents are both attorneys. They are not the most tech savvy people, but they certainly try.
Yeah.
I would say my interest in tech, I think, comes from my peers. I think I went to undergrad at Duke, and it felt like everyone was tinkering with all these new technologies constantly. I remember when Venmo came out and it spread like wildfire throughout our campuses. And then as I continued throughout my career, I just saw the step function changes that new technologies could provide. And I knew that I really wanted to be a part of that. Everything from data analytics to mobility to just making it really easy to book a healthcare appointment online. To me, I think technology really represents just a fundamentally better way to live life in many instances.
Yeah, yeah. And your focus on early stage, what really led you to that? Because Restaurants Brand International obviously
Mhm.
is a big company. And it was big at the time as well. So why early stage journey?
I love taking on risk to a big extent. I think to me, when I first was looking at a company to join, um, I really wanted to be at a place where I could have a high impact, make a difference, and learn a ton. And at the time, VIA felt very early stage to me. It was a Series B startup, and now it's I think a Series G, and so it's come a long way. But relatively speaking, I still got there when there was some infrastructure in place, and it felt like I could still there were some processes that I could, plug into.
Right.
Now, when I think about my investing role today, we're investing in oftentimes just ideas or founders at the very earliest stages of ideating. And so it's a whole different level of early stage. But I think what remains constant in my experience is that I really do love building and getting to be there at the beginning. From an operating perspective, this means literally building the company brick by brick from day one, pitching in on everything from product to customer service to ops. And on the venture investing side, it's really helping our founders think strategically about what does it mean to go to market? How do you get your first customers? How do you really tell your story in a thoughtful way? And so it's a different kind of an early stage perspective, but I love the thrill of coming in early and getting to partner with founders.
Yeah. I think I'd like to double click on your role at Emerson Collective. Also, why is it a collective? What does a collective really mean? And how can it really add value to company building and founders?
Absolutely. So we are definitely a bit of a unique organization. And so we use the word collective because Emerson is really more than just a venture capital fund. So there's actually three parts to Emerson. We have a philanthropy team that focuses on nonprofit grant making. We have a policy team that does a lot of advocacy work around various issues, whether it's climate change or gun reform or immigration. And then we have the venture arm. And so all of these branches work collectively to tackle really tough issues. And the efforts in one area really facilitate and help the efforts of the other. On the venture side, we really seek to invest in areas that have really tough systemic issues and where truly catalytic capital can be transformational. This covers areas like climate change, healthcare, fintech, the future of the worker. So we really want to focus on these areas that have historically just faced huge systemic barriers, and we think we could be most helpful. And I think in the best cases, we'll deploy all three of these tools and really try to think about these problems from a multivariate perspective.
Right. So it's theme first, and then you take measures accordingly to solve the problem that you're going
Exactly.
at. Okay.
Exactly.
And then what do you think has been the hardest challenge when it comes to solving systemic issues? And I ask that because I have a background in education and I've worked with the government of India to help figure out how can they improve learning outcomes for primary schools, which is like so specific. And I would say one of the hardest challenges that our country faces. And I have my learnings, right? Because, when you work with so many stakeholders, you obviously get a sense of how they work and what would the timelines look like, for example. I'm curious, what has been your, hardest challenge? And specifically, so if you could touch upon the US market or the geography in general, that'd be great.
It's such a good question, and it varies tremendously by issue area, but I can
Yeah,
do my best with some specific examples. Oftentimes the issues are structural, and you really need policy change before you can really make a difference with any sort of financing. I think the Inflation Reduction Act in the US is a great example of that. It's unlocked a tremendous amount of climate financing and incentives for a broad range of companies, both for profit and nonprofit. And it makes their business model sustainable for the first time. It's also increasing demand in all sorts of interesting ways. So, for example, before the pace of electric vehicles was expected to, or the pace of electric vehicle uptake was expected to be, somewhat modest or gradual. And now, because of the funding that's been unlocked, it's expected to radically increase over time. And so I think that there are certain changes within policy that can really impact consumer behavior and then, of course, investor behavior. There's all sorts of incentives that have been released, whether that's for battery recycling, energy generation and storage, Mining, I think there's a tremendous amount of opportunity unlocked by the IRA. And so that's a really great example where policy has unlocked just so many new opportunities. Um, and if you think about a totally different sector like healthcare, I think you similarly have challenges around what are the policies in place, what are the reimbursement rates for different kind of areas of care. And a lot of time that plays into the unit economics of different companies we're looking at. And so I think understanding what are all the underlying structural issues that you have to overcome in order to be a successful business is just critically important for us to understand as investors. And hopefully once those change, then we can work on deploying capital to those areas.
Right. I think it's an interesting mix, specifically so given your role at Emerson, because there are like three different divisions. So I'm curious, as a member of the venture investing team, what matters to you? How do you track your performance, or as an individual as well? What's most important to you, and who do you work with? Like, what kind of stakeholders do you work with day in and day out?
The most important thing to me is helping my companies become successful, right? I think of course there's an incentive in there for myself and the fund as well, but really it's I want to help founders build the most impactful, successful companies on the planet. And that's what gets me up every single day. And whether they're tackling climate change or education or healthcare, they're fundamentally working on technologies to make our systems and society better. Um, and to that end, I really am indebted to the founders that I work with, and I learned so much from them, from their teams, from other board members on how to help companies succeed. And so that's absolutely my North Star.
That's incredible. I think one thing that I'm curious about is that, in fact, you also mentioned that it's not a traditional venture capital firm, right? So how do you really think about your risk and reward, and does that differ from your peers in the VC space, or what does that look like?
Yeah, there's lots of different ways to think about this broader category of impact investing. And I would say where Emerson falls along that continuum is we really look to invest in companies that can generate top decile returns and a strong bottom line impact. And in fact, the word that we like to use is we invest in consequential companies. So companies that are tackling the hardest problems and by essentially being able to support them with really important capital, we can make progress on a lot of these issues. And so that's the framework that we use. We have a nonprofit arm. There are certain initiatives that we absolutely support through that arm, but that is not the focus of the venture arm. The venture arm really is focused on supporting companies in a for-profit perspective, which we believe is critical to tackling many societal issues today. And I do think it's different from other funds. I would say some are much more in the pure kind of impact play where they're maybe expecting less returns or no returns. It really depends on how they view it. Then there are some which are, on the other end of the spectrum, you have traditional venture funds, which historically have not spent a ton of time on impact, but I think that story is changing every day. And then, there are various funds that fall along that continuum. So I think there's room for multiple approaches, but I would say we very much fall kind of at the intersection of both impact and returns.
And so, since you said that these things are almost converging because people want to focus on sustainable models and sustainable problems and large problems, I think even in India now there's an increased focus on problems rather than returns first, which is really a very refreshing turn. How would you really think about, like, if I am to think about benchmark, right? Like not benchmark capital, but like benchmark of returns. How do you sort of like what number would that be? Because we are traditionally told that, one of the top quartile funds will probably make somewhere around 3x, 4x, sometimes even 5x. But that's all. So how do you, if I am to think about my financial model, how do I think about returns?
So again, I think because we are really focused at the intersection, we are targeting those 3, 4, 5, 6x plus returns. For us, we're out to prove that you can build companies that do good and do well at the same time. And I think we have great examples of that in our portfolio. I think, for example, when you look at companies like a firm, which created a lot of financial flexibility in the US, allowing people, to go on payment plans to afford basic goods in a lot of cases. That company went public. And I think like that's a great example of a company that has proven out that thesis. We're also investors in Chime, which has not exited yet, but is, on the short list of hot IPOs, hopefully in the coming years. And again, that fundamentally created financial access for individuals who've traditionally been excluded from the banking system. I think Chime in particular virtually got rid of overdraft fees in the US. And so I think we see more and more examples of companies that have really enduring business models, but that also have mission at their core. And that's what I think gets me really excited.
That's pretty cool. And how do you really identify these founders who are mission driven? Because of course there are founders who have different intentions, right? So someone who really wants to go after a problem and will do anything and everything to solve that problem. There are other kinds of founders as well, but and who have been actually successful still, right? So how do you really identify the kind of founder that an Emerson would like to fund?
Yeah, it's such a great question. I think really understanding what drives a founder is critically important. Um, why are they starting this company? What motivated them to tackle this problem? Is it because of a personal experience they had, something they went through with their family? Is it because they worked in an industry and encountered an issue over and over? What is the primary motivation? So digging into that for us is critical. And then I think the other piece, right, is there's impact in the way in your business model, but there's also other ways to think about impact. So are you as a founder committed to building a diverse and inclusive culture and team? Are you thinking about how to source talent across different ethnicities, demographics, genders, sexual orientations, et cetera? Are you committed to bringing people of color and women on your cap table? Oftentimes we'll see that founders don't have access to those folks. And so we'll actually help them find those people and create equitable boards, equitable cap tables, equitable leadership at the management level. And so I think it really does come down to founder motivation and intention. And the more time we spend with our teams, the more that we can get a sense of that.
It's interesting you mentioned diversity and founders being excited about diversity. Do they come to you? Do they realize themselves that they don't have a diverse team and they ask you for help, or you tell them?
It can be a mix. I would say, those who are self-aware they pull up a team slide and it's, people that all look the same. They'll kind of laugh and say, we know we have work to do. It's a top priority. We'd love your help. We're actively looking to change this through XYZ manners, right? I think it's more worrisome when there is no self-awareness and, there are all three people that lived on the same college floor and then they all work together at the same tech company and now they're launching a startup. And if they don't have self-awareness that is a problem, not just from a pure demographic perspective, but from a thinking perspective, I think that is an issue, right? And oftentimes we might be the first ones to tell them. And sometimes they take the feedback right away and are really excited to work on that and totally understand that it needs to be a company priority. And other times we don't see eye to eye, and that's okay. It just means we're probably not the right investor for that startup.
And obviously, like when a company is new, since you invest in super early stage companies as well, founders do not necessarily have the resources, right, to make a diverse team because of financial constraints or just because they could not find the right team members. So when is it, at what point does it hit them? Is it when they are building a product and they don't find diverse perspectives, or is it when they are presenting to VCs and they are questioned, or what really, like, when do you feel the need to, I mean, of course you should have a diverse team, but at what stage in the company do you feel the need to have one?
I think it has to be at the earliest stages, right? Because it's the saying, you can't be what you can't see, right? And I think that if you don't have any people of color, women at your company, it just becomes harder and harder at every level to recruit those kinds of people because people want to feel that they're stepping into a safe place to work. They want to know that they have others who can support them. And so I think it has to be in the company DNA from day one. And so whether it starts by adding someone on your cap table who comes from a different kind of background from yourself, or whether it's your first non-founding hire that it also comes from a different background from yourself, I think it absolutely has to be in a company's DNA, and there has to be a real commitment, and we can certainly help founders along that journey.
It's very interesting you said that because, I was into banking. So I started my career in investment banking. I was nowhere close to startups. And I only got exposed to startups when I saw people like me who started founding companies. These were like really young entrepreneurs, women sometimes who were founding companies, and some from my own college and some from my own hometown, which is actually a really small hometown in the central part of India. So yeah, you're right. Like unless you see people like you probably just shut it out.
And it's such a great example, right?
Yeah.
I think like it's amazing that that inspired you to switch your career and think about alternatives and, find places where you felt supported as well.
Yeah, absolutely. I think one thing that I'd love to talk about is that your focus areas, right? So last time we chatted, you mentioned that you are spending some time in health, climate, and fintech. I think would love to sort of double click within health as well, on menopause, right? And I know you're working on it. I have worked in a women's health company, and I realized that menopause is totally ignored. And I also feel that it's harder, at least in India, it's harder to get to the right target group. You really have to think through the GTM to
Mhm.
find your target group. So, what have your learnings been? What are you excited about? And how do you think we can get more and more people to approach the right solution? Actually, just identify the problem in the first place and approach the right solution. Where do you think we are right now?
Yeah, I think you raised such an important point. I think awareness of menopause in the US, while it's increased a bit in recent history, it's still abysmally low, especially because it affects such a huge swath of the population. It's almost 30 million women in the US a year that suffer from menopause. The age range is huge. It's anywhere from about 45 to 65. And yet, most of these women are completely ignored. Most of them think they um, most of them feel tremendous shame about their symptoms. They don't talk to their doctor about it. Their doctor never talks to them about it, which is even more problematic. And I think on the media, the only thing we hear about is hot flashes. And I don't know about you, but when you're young and you hear about hot flashes, you don't think it's a big deal. And I think as you dig into the research, you realize actually how debilitating they are and how disturbing they are to a normal workday. And it's not just hot flashes, but it's anxiety, it's brain fog, it's inability to focus. It's These are real side effects, which unfortunately have not been studied in great detail. And so I am really excited about this new wave of menopause startups that have cropped up in the last few years. To me, I think this is driven by the women who have entered menopause themselves largely and are desperate for solutions and have spent time digging into all of the science and looking at all of the research and trying to create companies around that. And so, by example, we recently announced an investment in a company called MIDI Health, which is focused on providing comprehensive virtual evidence based care for women in menopause. And they offer a range of solutions, everything from hormone based therapy to other kinds of medications to psychotherapy, because every woman is different, and I think that's the tough part of menopause. It's not just you take a pill and it goes away. It often
Yeah.
requires a lot of trial and error, again because the research is so thin. And so the more awareness that we can bring to the space, the better. And I was really excited that a couple of weeks ago the New York Times even had a big article on menopause. And so I think that we are definitely making steps in a positive direction, but it's still a very, very new space today, as you said.
Yeah, I think what is really interesting is that you pointed out the lack of research in the space. And I think it's not only prevalent in menopause, but actually across women's health, right? And I feel that a lot of the work that startups do today will actually define the kind of future that women have. And so it's very important to do evidence gathering to a great extent. How do you see that playing out across the menopause companies that you've identified or sourced so far?
Yeah, I mean, I think that's exactly right, right? Like sometimes I look at these statistics and they're staggering. Women were not included in clinical trials until the 1990s. Like this is
Yeah.
recent history. It's in my lifetime, right? And so it's crazy to think about that. I do think these companies are driving sea change. Many of the startups that we've looked at and worked with are actually funding these studies or working with larger pharma corporations to fund some of this research because they realize there is such a demand.
Right.
And so there has to be this collaboration between the scientific community, the startup community, and others if we really want to make a difference. Because at the end of the day, we can't treat a condition unless we understand the underlying root causes. And so I think it's hugely important, in order for our startups to partner with academic institutions and policymakers in order to make real change.
Yeah. And the other thing that I would want to touch upon is metals and supply chain in electric vehicles. And I'm specifically excited because you have a background in mobility. And I think US is also at this, great point in time where there is so much that can be done. Obviously geopolitical tensions aside, but in a way, it's really enabling the country to be self-sustaining, right? So how does a venture investor really think about that, and where do you think the industry is headed?
Yeah, so this is one of my favorite parts of venture, that we switch from different topics and get to go deep on different
Yeah.
sectors, ranging from menopause to metals. Um, I think metals is a fundamentally fascinating industry. There's some reports that have been published that essentially say we need $6 trillion more in metals value to meet the demand, from electrification by 2050. And that is a staggering amount, right? Like that is more than the GDP of many, many countries.
Right.
And so the kind of demand that we need to service is enormous. And I think as venture investors, like that represents a huge opportunity. How many different industries have a TAM of 6 trillion plus? And I think what's interesting, right, is the demand comes from a lot of different places, certainly from electric vehicles, as you mentioned, but also from power grids, power generation and storage, in addition to more traditional sectors, just like construction. And I think if you look at the metals that we need to get there, certainly copper is hugely important for power grids. Lithium, nickel, cobalt, hugely important for lithium ion batteries and electric vehicles and other technologies. And then aluminum and steel across, EV vehicles, their bodies, and then industrial applications. And so I think if we are serious about making an impact on climate change and onshoring a lot of these supply chains, we absolutely need to be investing in these metals. And there's various paths to invest in these kinds of metals across the supply chain, like you mentioned, and we're excited to support that.
But what is the real problem in the sourcing, or in the transportation, or where is the real problem, and how can, because obviously as we try to solve for climate change, we have to take into consideration the different types of financing, right? That goes
Yeah.
into solving some of these challenges. But where does venture capital really fall? Right. So what problem and where venture is what I'm trying to understand.
Yes, it is such a good question. I think in some cases, right, it's a resource problem.
Mm.
There are metals like copper, which fundamentally we need to discover new sources or we are going to have a huge shortage,
Right.
very soon. And I think that there are, interesting startups that are leveraging AI to help us uncover where there may be new reserves. And so I think leveraging those kinds of technologies to say, how do we get smarter in drilling? How do we get smarter in overall kind of mine exploration so that we're not investing so much in CapEx with kind of minimal outcomes, right? I think what's happening in copper largely today is you have existing companies that are slowly expanding out their existing mines, but many of them are actually not investing in net new projects because it is incredibly expensive and the payoff isn't clear. And so if
Sure.
we can invest in technologies to kind of uncover these new resources in smart ways, I think that's a huge opportunity.
Yeah.
I think on the other hand, if you look at something like lithium, there are huge opportunities in terms of the way that we extract it, right? We're investors in a company called Lilac Solutions, which is focused on direct lithium extraction. And so I think that the more that we can invest in those kinds of companies on the lithium supply chain side, I think is incredibly interesting, right?
Yeah.
And then there are certain metals that I think pose real risks from a ESG perspective. You know, frankly, if you look at where cobalt is mined in the Democratic Republic of Congo, there's a lot of concerns and from an ethical perspective in terms of how that metal is mined. And I think because of that, while its demand is expected to increase in the short term, people are actually looking for alternative solutions longer term because it is such in a limited supply. It's largely constrained to one part of the world. And so people are looking for different alternatives. So I think it really does depend kind of metal by metal what the challenges are and where the value can be created. But I think there are sufficient opportunities, you know, up and down the supply chain.
Right. And I think one thing that you mentioned is that you could really leverage AI to identify where can you extract the metal from. And I think that's really exciting for me in particular because of the investment in Impossible Metals. And I feel like a lot of these companies could be potential partners to the likes of Impossible, right? So I'm actually curious, AI definitely is key and is one of the most important technologies of our times, right? But obviously there are accuracy issues. And so from that perspective, or actually even if you consider extraction and climate change in general, time is of essence. So how do you sort of identify the best AI technologies, or are AI technologies mature enough for us to really understand where to extract which metal from?
You know, I think it is an open question in terms of the advancement of AI. I think AI as a whole um, is still fairly new, and so I think we are learning. What I will say is that, you know, we do have examples of companies that are leveraging this technology, which have seen some success and, you know, have raised some great rounds of funding, and I think have shown some early promise with the technologies. You know, I'm specifically thinking of companies like Cobalt Metals, which are essentially leveraging AI in order to find reserves of lithium, copper, cobalt, et cetera, right? And I think that the more that we can leverage these technologies to help us with some of these fundamental problems, the better. Now, I am not an AI expert, but I think that the best thing we can do, right, is leverage those around us who are experts to help us vet these technologies and also help steer companies in the right direction. You know, I think ultimately AI can be used across many applications, and you know, it's part of the founder's journey in order to understand what is the best application for their technology. You know, I think there's probably a wide range of use cases that I can't even imagine today, you know, not just across metals, but in other parts of the climate stack where AI could be incredibly relevant.
Right. I'm actually curious, how do you make